buy the farm for the right reason, or don't buy the farm for the right reasons. But I wouldn't let the interest rate be the deciding factor.
I talked with Jason and Sean with Buckland Funding about what they are looking for or things you should know when you're looking to buy a piece of recreational land and using a loan. And also a really hot take, the good tip: marry the farm, date the interest rate. That's something that's at the forefront of everyone's minds right now with interest rates going up higher. But I hope you guys enjoyed this snippet from the Land Podcast. Let's get right into it. Here we go. Here's a saying that everyone's been saying, and I want your guys' opinion. Marry the farm, date the interest rate. Dumb or good idea?
Marry the farm, date the... Well, I mean, I'm a proponent of that because, we don't have... Go back to what I said, like you're buying it for reasons beyond an interest rate, right? Now, it factors in, it drives what you can afford and all that stuff, but it's not like maybe an operating farm as much because it's not typically paying for itself. So our product, and we can get into kind of what we normally do, but our rates are a little more on the shorter term scale, or a 5-year balloon type loan with a 20 or 25-year payback. In rising interest rates environments, those tend to have to work a little better because you're borrowing money at a cheaper point than you would if you locked it in for 30, 20, 25, 30 years. Most people don't hold their farms that long on the average. So you're probably going to be getting out of that interest rate for one form or another. Maybe rates went back down in that 5-year window and you refinance it at a lower rate. Maybe you ended up selling it and trading it into a new farm. So you got off that loan and you're getting into a new loan. The rates can come and they go, right? But you buy the farm for the reasons that you desire the farm for. I think people just like certainty. When there's uncertainty, it makes them pause a little bit. And I think we're definitely in that time frame right now. It's just been such a long sustained period of low interest rates, right?
People are spoiled.
There's been people that haven't borrowed money when rates were in this realm right now. And so when you're used to hearing a 3 in front of something on your rate, or you used to hearing a 4, when you hear a 5 or a 6, and we're not far away from hearing a 7, people freak out, right? And probably rightfully so. I mean, it's your home loans on us. Some people have gotten home loan rates in the 2% for their primary residence, and when rates go back down, there's a refi boom. On the home loan rates. And the same thing could be said for, loans on, recreational ground. Go back to your statement, Jake, like, you marry the farm and you date the interest rate. I mean, you're not married to the interest rate for the life of the loan. You may end up selling the farm and buying a new farm or upgrading. So buy the farm for the right reason, or don't buy the farm for the right reasons. But I wouldn't let the interest rate be the deciding factor.
Yeah, I agree. I think people are always looking for an excuse not to buy something at all times, no matter what. It's like when things were going really, like even let's say 2021 summer when prices were starting to go up high. If you're like, oh man, I'm not buying, it's going to go down.
Right.
Well, man, that cost you probably 12, 15% on land prices. So now you can buy less. And then now prices haven't retracted. So now you can buy less because interest rates are higher. So it's like, man, there's an excuse for everything, but it's like, to your point, just buy the farm and things will sort itself out later. Just make sure you can financially afford it. And that's where
make sure you
guys have those safeguards. Yeah. All right. I'm trying to buy my first 40 and there's, let's say $5,000 CRP income on it, which is pretty good. Can you use that income towards your debt to income ratio to help qualify for that loan with you guys typically?
Yeah, we'll factor it in for sure. I mean, it's just it's typically on the farms that we look at, whether it's a 40 or even a 20, all the way up to, 1,000 acres or whatever we've done a wide range of sizes. It's typically, we can use it at income, but if it's coming down to that income being the difference maker between affording it and not affording it, we're probably getting a little skinny on what you're buying, right?
Sure.
Because it's such a small piece of the operation. If you're getting into row crop or other farms that are more productive ground, but on the hunting ground, that income is a small sliver of the big picture when it comes to debt to income. We'll throw it in there if it really comes down to that being the difference maker, then we'll factor it in. But it goes back to debt to income if it's a very simple kind of vanilla loan application where someone's got a W-2 job. We can turn those pretty quickly because can you afford it or not afford it, really what it comes down to.
Mm-hmm. And okay, so now the next question probably someone has in their mind is, and there's a million creative things on the internet, but I want to buy 40 and I think there's 40 grand worth of logs on there. Can I use the timber as some form of fashion of collateral pre-purchase.
Yeah, we've had that. That is, that's getting pretty creative. I think that relates more to, can I use that for my equity, than it does, can I use it as part of my income to afford it? Because once you've harvested it,
Depleted.
You can't do it the next year, right? So it's not can you afford it from a, do I make enough money to cover all my payments and my loan payments? We typically don't allow that to be a piece of the down payment. And there's also a debate on this because of how you may harvest it and improve the habitat. So I don't want to discount that, but to me, if you're harvesting it and it takes a while to regrow that, you are affecting the value of the property in some form. So to me, the healthy way is have a little bit of equity, a little bit of skin in the game. The bank's going to finance the bigger portion of the purchase. And I always liked, inside our box is 25% down. Have we deviated and go to 20%? Yeah, we will. We kind of want to look at how you fit inside the box with all the different criteria before we start making exceptions, right? Because if everything's an exception, then you're outside the box. So, but the inside the box is 25% down from your own funds. The other thing I look at, which I think is just a really healthy thing to look at, is what does your savings look like after your transaction, after you've used your down payment? If you're depleting your savings down to the point where you have no cushion for the unknown, or if something happens unexpectedly, you're getting, even if your income can cover your loan payments and all your other obligations, you're starting to put yourself, your household budget and covering your obligations at risk a little bit.
Mm-hmm.
So we kind of have a check back where we look and say, okay, got the down payment. All right, after the down payment, is there any savings left? It's really simple. We just look, all right, what's your 12 months worth of loan payments? Is there enough, not even household expenses, just loan payments? Could you cover that with a savings? That's just a good check back for us.
Mm-hmm.
And I don't know if that's really standard. I think that's just something that we felt like is a safe thing for people to be looking at.
Yeah, I'm guilty of it all the time. Pulling out my phone, looking at my bank account, man, what could I buy?
Yeah.
It's like, oh man, I could buy this size farm if I, put it all on the line, but that's not the right thing to do. And I know everyone else does it too.
Oh yeah, absolutely. Absolutely.
Yeah.
And there's other things we can do. We'll finance farms with no money down, but they have other farms with a good amount of equity. We'll get creative if we need to. If they've got other assets that they want to pledge, that's not typically your first time buyer.
What are some of those assets that you can pledge that people could potentially?
More times than not, it's another farm, right?
Sure.
Equity, they've had a farm for a while, the value has gone up or they paid down, whatever the case may be. That equity can kind of be paired a little bit. We still like to keep a nice cushion. It's a little more cushion than 25% because we're relying on valuation at that point of the other farm. And some people will pledge a home if they have equity in their home, or they may say, I may take out a home equity line of credit on my home to use as a down payment, and they can do that with us or with their maybe the bank that they're typically doing their home loan with. If you have a brokerage account that has now this may come into play more so now when the market's down. If you got a brokerage account that's non-retirement funds, if they're retirement funds, they can't be pledged. If it's post-tax investment accounts, marketable securities that we can get a real current value any given day, we can take a lien or have that be pledged as equity.
So if I own 20, or let's say I own a lot, let's say I own $100,000 of Facebook stock, you could potentially pledge that.
Yeah, that can be pledged. Mutual fund, the spectrum of those is like, okay, do I have Bitcoin versus do I got John Deere stock, right? There's a spectrum.
One's a little more volatile than the other.
One's a little more volatile, right? So I think there's typically mutual funds and EFTs and different things that are really diversified type investments. They don't have as much volatility. That's what you see inside your normal brokerage accounts. And we've done a little bit of that. And I think, you'll see maybe a little bit more of that when someone's source of down payment may have been in the markets and the markets are down and it's just not a good time to pull them out.
Yeah, they don't want to realize that loss Or yeah, that makes sense. Hope you guys enjoyed this. My name is Jake Hofer, and I'm a real estate agent out of the state of Illinois, and it's my goal to help 100 people buy their first farm. Been doing that with the Land Podcast and clips like this every single Thursday and Saturday that are released here on the channel. And to be one of those 100 people, all you have to do is, if you're in the state of Illinois and I can help you, I'd be happy to do so. Number two, if you want to get connected with someone that can help you, reach out and I'll be happy to get you in contact with an agent that I would personally do business with. And the last one is, if you just simply learn something from the content we're putting out, or you get inspired to take action, I want to know, get you out of that spreadsheet. I'm on a mission to help 100 people. Until next time, see ya.